Global markets are facing uncertainty this week. Several key events are impacting investor sentiment. The US Federal Reserve will meet to discuss interest rates. Inflation remains a concern in many economies. Trade tensions between the US and China are also adding to market volatility. Despite these challenges, there are also some positive signs. The global economy continues to grow, albeit at a slower pace. Corporate earnings have been relatively strong. Central banks around the world are maintaining accommodative monetary policies. In the United States, the Federal Reserve is expected to keep interest rates unchanged at its meeting this week. Investors will be watching closely for any clues about the future path of interest rates. The US economy is showing signs of slowing down, but inflation remains elevated. In Europe, economic growth remains sluggish. The European Central Bank is expected to maintain its current monetary policy stance. The ongoing war in Ukraine is also weighing on economic activity in the region. In Asia, economic growth is mixed. China's economy is showing signs of recovery, but Japan's economy remains weak. The Bank of Japan is expected to maintain its ultra-loose monetary policy. Equity markets are experiencing volatility this week amid global uncertainty. Investors are weighing the potential impact of rising interest rates, inflation, and geopolitical risks. Bond yields have been rising in recent weeks as investors anticipate higher interest rates. The US 10-year Treasury yield, a benchmark for global borrowing costs, has risen above 4%. Commodities prices are mixed. Gold prices have been volatile as investors seek safe haven assets. Oil prices have been rising due to concerns about supply disruptions. Agricultural commodities prices have been impacted by weather conditions and the war in Ukraine. The current market environment remains challenging for investors. Uncertainty is high and volatility is likely to persist. In this environment, investors may want to consider a defensive posture. Bonds can provide stability to a portfolio during times of market volatility. Investors may want to consider increasing their allocation to high-quality bonds. Commodities can provide a hedge against inflation, but investors should be selective in their exposure. Gold and agricultural commodities may offer some protection against rising prices. Equity markets are likely to remain volatile in the near term. Investors may want to consider reducing their exposure to growth stocks and focusing on value stocks. In conclusion, investors should proceed with caution in the current market environment. A well-diversified portfolio that includes a mix of stocks, bonds, and commodities is essential. Investors should also have a long-term investment horizon and be prepared to ride out market fluctuations.